Welcome back. We've got a rally underway this morning. Futures indicating a pretty good move at the start of trading this morning ahead of a big week of earnings, economic data, and, of course, the midterms. Dow Industrial's up 176 right now. The Nasdaq is up 69. Some earnings. Lyft is reporting after the bell tonight. Disney is out tomorrow. Goldman Sachs is actually cutting its S&P 500 earnings estimates now through 2024. Let's get into it right now with Ava Labs President John Wu. John, great to have you this morning. Thanks so much for being here. What do you think this rally is about? Is this some optimism about a change in policy ahead of the midterm elections?
Oh, absolutely. I think there's hope that there'll be change in policy after the midterm elections based on where the polls are going. And also, frankly, I think the markets were extremely oversold coming into this. So a lot of this is a relief rally.
Yeah. So what do you want to do with it, though? I mean, we still have dire predictions about a macro story weakening in 2023. We know that we've got the consumer price index coming out this Thursday. Economists are expecting a month-over-month increase of 0.7%, 8% year over year. These are still incredibly elevated numbers and are a problem for the Federal Reserve, which will continue to raise rates to weaken things. Do you want to buy stocks going into a period knowing that things are weakening?
I think you have to be very selective on which stocks you look at. If you look at a lot of transaction-oriented type companies, you saw that the transaction volumes have been down. They've been down from both the unit counts as well as the revenue per unit. And a lot of the earnings that you saw in the last, recently in the last couple of weeks, the good news here is that the net losses or the units have decreased. And it's more about the average revenue per user or the average revenue per account that's going down. So at least that means you've cut pretty deep into the revenue line item in many of these companies, and hopefully there's not much further to cut. And then you buy the ones with good valuations and good earnings.
Well, let's talk valuations. NASDAQ is down 33% year to date, John. We've got weakness across the board. Are there values in any of these major tech names?
You have to go to the ones where there's positive EBITDA, definitely, and decent growth. You cannot buy the high volatile old SaaS type companies that are trading still 7, 8 times, 9 times revenue. The old adage with like SaaS companies is 5 times revenue, so you have a little bit of time there. Obviously, cryptocurrencies is another high risk asset class. Those are going to be, depending on which ones, you're going to have to look for alpha within it, but those are going to be very, very tenuous as well. But with each one of these asset classes, even if it's high growth, there are better ones and there are worse ones. And I think it's actually a haven for good long-short hedge fund managers who can actually pick good ones and obviously hedge with the bad ones.
All right, John, it's great to get your insights. Thanks very much.
Thank you, Maria.